I'm talking with Peter Schiff. He's CEO of Euro Pacific Capital, and you just mentioned something about the dollar, and I wanted to ask you. So the dollar index has been up 9 months in a row at a 12-year high versus the euro. Janet Yellen talked about the economic effects of the strong dollar. I do have to ask you, have you been surprised by the strength of the dollar in recent months?
Well, I'm surprised that it rallied this much, but it doesn't mean that it's permanent, because you have everybody speculating. Right? The conventional narrative is that the Fed is going to be raising rates and the rest of the world is going to be easing.
Right.
And it's based on that speculators have bid up the dollar. But look, we got the current account deficit that came out today. It jumped by 14%. It's the biggest increase in 2 years. This would normally be negative for a currency. And of course, that current account would be even higher if the Fed raised rates, because we'd have to pay more interest to our overseas creditors. So the fundamentals are weak, but the fundamentals don't matter right now when you've got this false narrative and the traders are, running with it like a horse with a bit in its mouth.
Right.
But look, we got a small taste yesterday of what could happen. The dollar had its biggest one-day decline since 2009. Now, they reversed it overnight.
It was a strange chart. That one-day chart of the euro, it's like a spike and it came right back down.
Look, it's like a reflexive action right now to buy the dollar on the dip. But when traders wake up to reality and realize how wrong these bets are, they're going to unwind these trades, and the dollar is going to implode very quickly. And I think the people who have been betting on the dollar and who have made a lot of paper profits, if they're caught in this when it reverses, they're going to end up losing a lot of money.
Right. But on the flip side, the people who've been short the dollar and betting against it have lost a lot of money.
Oh, yeah. I mean, especially if you're leveraged and you're betting against the dollar. But look, people were losing money betting against subprime for several years until the bubble burst. And the people who were buying those mortgages and paying above par for them on leverage thought they were so smart until the market collapsed. And if the government didn't bail all these banks out, they all would have failed based on these bad bets. The question is, how many banks are going to fail when the dollar collapses? I wonder how many of our lending institutions are levered up, short, long the dollar, and we'll see what happens when they get caught on that trade.
If that happens, you're absolutely right. But how have you been positioned, and how are you positioned now vis-a-vis the dollar?
Well, I've been positioned the same way for a long time. I mean, we're not leveraged. What we do with our clients is we invest in overseas stocks, and we get our exposure to foreign currencies through the foreign stocks that we own. So we own stocks in places like New Zealand, Singapore, Hong Kong, Switzerland, Norway, Canada, various places around the world. And so far, over the last couple of years, the currency exposure in the short run has worked against us. Even as the foreign stocks that we own have generally risen, they haven't risen enough to offset the strength of the dollar. But I think that's all temporary. I think when the dollar finally implodes, when people figure out the real state of our economy and what the Fed is really going to do, then I think all those gains are going to be revealed, because they're being obscured right now by the overvaluation of the dollar. But I think the real move in the dollar is going to be a crash.
Okay, and presumably you're still bullish on gold based on that
Absolutely.
scenario?
It's the same scenario, right? Traders are bearish on gold because they're bullish on the dollar and they believe the Fed's going to raise rates. When they realize that they're not, and they have to rush to unwind these short trades and get back out of the dollar. I mean, if you thought gold went up a lot when the Fed did QE1 and 2, right, wait till you see what's going to happen when they do QE4.
Right. Well, but it rallied end of last year, and people thought, okay, the gold's back. It's come back down to like around 1150 as we're talking here today. Where do you see it going from here?
I think it's going a lot higher. I mean, I've thrown out numbers, 2,000, 5,000. Ultimately, I can't tell, because there's no real ceiling on gold, because there's no floor on the dollar. When people realize that we can never raise rates and it's permanent QE, right, and the Fed can never shrink its balance sheet, and it has no ability to control inflation, ultimately it has to let it run rampant, then there's no place to hide. And you've got even the soundest central banks around the world deliberately creating inflation with negative interest rates,
right,
promising to debase their currency. In fact, the new mantra is that price stability is bad. We need rising consumer prices. If we don't force consumers to pay more money for the things that they need and that they want, all hell's going to break loose. So all central banks are now creating inflation. It's like, your house is on, firemen come to your house to set fires, not put them out. That's what we've got now with the central bank. So with all these central banks promising to destroy the value of money over time, right? What are you going to do to preserve your wealth? People are going to turn to gold in a big way all around the world.
Look, I know you believe this, but as a wise man once said, the market can stay irrational longer than you can stay solvent. So you're going to stay long gold and bet it and expect this dollar decline to come forever, no matter how long it takes?
Well, it's not going to take forever. I mean, people said the same thing to me about the housing market. I mean, how long are you going to rent your home? and I rented for years, and I eventually bought a house, and I paid less than half of what the guy who sold it to me paid.
Right.
But I rented for a long time, waiting for that to happen. And so I don't think it's going to take decades. I'm surprised it's taken this long, but I do believe that the fact that we've had to wait so long, it's an even bigger payday because all the problems, right, have gotten bigger because we've been able to delay the day of reckoning. But I can stay solvent if I'm not on leverage. That applies to traders who have levered up. If you're in options and you have like a time limit or you've borrowed a lot of money, that's a problem. But if you just own positions for cash, and especially if you own foreign stocks and you're collecting dividends, time is your friend. You can wait it out. And eventually you're going to get paid.
All right, time is not our friend for this segment, but we do have to leave it there, Peter. Thanks very much.
Hey, anytime.
Let us know what you think in the comment section below or send us a tweet at Yahoo Finance.